If you're listening to my voice right now on this Sunday afternoon, February 9th, 2026, you are standing on the edge of a financial abyss. The time is exactly 3:37 p.m. Eastern Standard Time. We are in the final countdown. What you are witnessing in these quiet hours is not just a market correction or a weekend lull. You are witnessing the final moments before the silver futures market commits a scheduled act of systemic suicide. I am your host, and you are watching Analysis with AG. We have exactly 2 hours and 13 minutes until the global financial architecture as we know it changes forever. If you did not secure physical metal before the close of business this past Friday, I have to tell you with the cold, hard certainty of mathematics that you are likely being permanently locked out of the silver market. This is not a drill. This is not a speculative theory designed to garner views. This is a documented, rule-based event that is about to trigger the moment the Asian futures market opens in Sydney. I am going to explain to you in exhaustive technical detail why the silver market is about to do something it has only done twice in the history of modern trading. It is going to open limit up, and then it is going to freeze. And when that freeze happens, the system stops working for you. Your buy orders, your market orders, your desperate Sunday night panic bids will simply sit in a digital queue screaming into a vacuum. They will not execute because there will be no sellers. The doors are locking, the vault is effectively empty. And the algorithm that runs our lives is about to hit a wall of physical reality that it cannot calculate its way around. Before we dive into the data that the mainstream media is actively suppressing, I need to speak to you about the reality of the platform we're on. Right now, as this video begins to circulate, the censorship filters are already scanning for keywords. Silver, futures, limit up, COMEX. These are the red flags that trigger the throttling of reach. The algorithm wants to bury this data because this data is dangerous to the narrative of a stable dollar. I am not asking you for a favor. I am demanding that you hit the like button right now. Do it in the next 5 seconds to force this information onto the public timeline. We have to manually override the suppression. If we don't, the only people who will see this are the ones who already know the truth, while the rest of the world walks blindly into the slaughterhouse on Monday morning. Let's look at the gray market. For those who don't know, the gray market is where the real price discovery happens when the official exchanges are dark. It is the off-exchange, broker-to-broker negotiation that takes place on Sunday afternoons. It is the pulse of the desperate. As I record this, the gray market spread on silver has hit $12. $12. On Friday, the official CME COMEX settlement price was $76.14. That is the lie they want you to believe. But right now, the actual bid the price people are willing to pay in real currency to secure a position before the open is $88. That is a 15.7% premium that is materialized in less than 48 hours. The paper price and the physical reality have decoupled so violently that the entire futures market structure is about to snap like a dry twig. Most people have never heard of CME Rulebook 5889. They think the market is a free flow of supply and demand. It isn't. It is a controlled environment with hard-coded circuit breakers. These are called limit moves. The Chicago Mercantile Exchange, which operates the COMEX, has a rule that states if the price of silver moves more than the maximum allowable limit in a session, trading is halted. For silver, that limit is $5 in the overnight session and $10 during the day. But here's the critical part they don't teach you in finance class. If the opening price, the very first trade gaps beyond that limit, the market doesn't even trade. It locks. It freezes. The screen will display a message, limit up, no offers. Your order will sit behind 10,000 other orders and it will never fill because nobody is selling at the limit price when the real price is already $10 higher. This is not a theoretical exercise. We have a blueprint for this collapse. Look back at March 8, 2022. The London Metal Exchange, the oldest and most prestigious metals exchange on the planet, was forced to halt trading in nickel. Why? Because the price went from $29,000 to over $100,000 in 48 hours. The squeeze was so catastrophic that the exchange didn't just stop trading, they cheated. They canceled billions of dollars in executed trades. They rewound the clock and said those transactions never happened. They did this to protect the clearinghouse and the big banks like JP Morgan and HSBC from total bankruptcy. They chose to destroy their own credibility to save the system. And I am telling you the COMEX is preparing to pull that same lever tonight. Let's look at the math, because the math is the only thing that doesn't lie. As of Friday's close, the COMEX reported a total registered silver inventory of 41.3 million ounces. Registered means it is sitting in the vault, cleared, and ready for physical withdrawal. That sounds like a lot until you look at the open interest. There are currently 212,000 active contracts. Each contract represents 5,000 ounces of silver. If you multiply those numbers, you get a total liability of 1.06 billion ounces. The market is short 1 billion ounces of silver against an inventory of only 41 million. That is a coverage ratio of 3.8%. Let that sink in. The exchange only has 3.8% of the metal it would need if even a small fraction of the traders demanded their physical property. Over the last 6 weeks, the registered inventory has been bleeding out at a rate of 1.2 million ounces per week. At this current speed, the entire vault hits zero in 34 days. But the drain isn't staying steady. It is accelerating. It's accelerating because the arbitrage is too big to ignore. If you can buy a paper contract for $76 and the physical metal is trading for $88 in the gray market, every smart player in the world is going to stand for delivery. They're going to drain the vault and break the system for a $12 per ounce profit. I need you to be my eyes on the ground right now. I cannot be everywhere. I need you to go to the comments section and report what you are seeing. Go to your local coin shops. Check the online bullion dealers. Are they sold out? What are the premiums they are charging over the spot price? My field reports from Texas, Florida, and even as far as Germany and Australia are coming in with the same message. The shelves are empty. Dealers are being told by wholesalers that there is no metal available for at least 4 weeks, with no guarantee on price. The physical market has already left the station. The paper market is just a ghost, pretending it still has control. There is a specific type of order being placed right now by thousands of traders, the market on open order. This is a blind order that says, get me in at any price. It is an order of pure capitulation. When a Sydney session opens in less than 2 hours, the matching engine, the algorithm that pairs buyers and sellers, is going to look at the order book. It is going to find a mountain of buy orders and an empty wasteland of sell orders. There are no offers at 77. There are no offers at 80. The computer will be forced to gap the price higher and higher until it hits the $5 limit. At that point, the circuit breaker trips. The market locks, and the official price of silver will be frozen while the real world continues to spiral upward. The disconnect is becoming mathematically impossible to defend. Once that lock happens, the screen might show $81, but in the private deals in the Shanghai Gold Exchange and in the dark pools, silver will be trading at 90, 95, or even 100. This is the great divorce between the digital illusion and the physical reality. Is the moment when the paper price dies. Look at history. This has happened before. When the LME nickel market broke, the physical price in China stayed at $90,000 while the paper market was frozen. The physical world didn't wait for the bureaucrats in London to fix their computer system. The physical world moved on. And that is what is happening tonight. The paper market is about to commit suicide, and the physical market is going to decouple permanently. If you didn't buy your exit ticket on Friday, you are going to wake up Monday morning to find the doors to the burning building are locked from the outside. Let's talk about the money that is about to be vaporized. The total notional value of the silver open interest is roughly $80 billion. If the market opens limit up, every long position makes $5 an ounce instantly. That is a $5.3 billion profit in 1 second. But for every winner, there is a loser. The short positions, the banks, the hedge funds, the high-frequency algorithms just lost $5.3 billion in 1 second. That triggers a margin call. A margin call triggers a forced liquidation. Forced liquidation means the shorts are forced to buy back their positions at any price, which creates more buying pressure, which triggers another limit-up move. This is a liquidity cascade. It is a gamma flip. It is the mother of all short squeezes, and the fuse has already been lit. Who are the shorts? They aren't retail traders like you and me. The shorts are the bullion banks. They are the names you know: JP Morgan, HSB, and the rest of the institutional elite. For decades, they have suppressed the price of silver through a scheme called rehypothecation. They sell the same ounce of silver 50 times to 50 different buyers, praying that 49 of them never ask for the physical metal. It's a fractional reserve scam, plain and simple. It worked for years because most traders are speculators who just want to trade the price action. They never wanted the heavy, bulky metal. But the world changed in January of 2025. The delivery requests started to spike. People stopped trusting the paper. The banks tried to slow walk the drain. They raised margin requirements. They delayed shipping. They told dealers to wait. But you can only hide a shortage for so long. Eventually, the market does the math, and the market realized that the banks were short 1 billion ounces with only 40 million in the vault. While the Western banks were playing paper games, the East was playing for keeps. Over the last 6 months, China has imported 462 million ounces of silver. That is more than the annual production of the 3 largest mining countries combined. They didn't do this for fun. They did it to backstop the Shanghai Gold Exchange. They did it to create a physical pricing mechanism that the West couldn't manipulate. Right now, the silver price in Shanghai is trading at $91. The spread between New York and Shanghai is $15. That spread is the smoking gun. It is the proof that the New York price is a complete fabrication. The high-frequency trading algorithms are not stupid. They see the spread. They see the inventory drain. They are already adjusting their models. They are pulling their sell orders and flipping net long. The machines have abandoned the banks. The machines only care about risk-adjusted returns. And right now, being short silver is a recipe for infinite loss. If the COMEX default, and I believe they will declare force majeure. They will tell the contract holders, we can't give you the silver, so here's a check for $76. But by the time that check clears, $76 won't even buy you half an ounce on the street. We are exactly 73 minutes away from the Sydney Open. The ASX in Australia is the canary in the coal mine. It's a smaller market, but it's the first one to react. If Sydney opens limit up, that is your final warning. Then at 8 p.m. EST, the COMEX electronic session opens in New York. That is when the true chaos begins. If the COMEX locks, the entire commodity complex will catch fire. Gold will spike. Platinum will spike. Even Bitcoin will react because the market will finally realize that the system of central bank manipulation is dead. When a market stays locked for days, as nickel did, the industry doesn't stop. Manufacturers still need silver for solar panels, for medical equipment, for the defense industry. They will go to the private market and pay whatever it takes. They will pay $100 an ounce or more. And the paper price on the screen will stay frozen at 81, looking like a relic of a forgotten era. Let's look at the vault data again, because I want you to see the trend. In September of last year, we had 87 million ounces. By December, it was 52 million. Now, it's 41. This is a controlled demolition of the inventory. The exchange is out of options. They can default. They can try to steal metal from the eligible category, or they can shut the whole thing down. None of those options protect your wealth. None of those options save the dollar. Silver isn't just a metal. It's the Achilles heel of the entire fiat currency system. If the silver market breaks, the illusion of the dollar's value breaks with it. This timing is not a coincidence. It is geopolitical. 3 weeks ago, the BRICS nations launched their gold-backed trade settlement system. They are moving away from the dollar because they know the dollar is backed by nothing but debt and broken promises. They have been stacking physical metal for a decade while we were stacking paper contracts. China has 10,000 tons of gold. Russia has 3,000. They're ready for the reset. We are not. The Federal Reserve is trapped. They can't raise interest rates to save the dollar because the interest on the $36 trillion national debt would consume the entire tax revenue of the United States. They can't print more money because inflation is already eating the middle class alive. They are paralyzed, and the market knows it. That is why the gray market premium is $12. The smart money is front-running the collapse of the Fed's credibility. I want to tell you what I did this week. I didn't just wash the charts. On Thursday, I called my dealer and ordered a monster box, 500 ounces. I paid a $9 premium over spot. At the time, I felt like I was being gouged. But today, with the gray market at 88, I realized that $9 premium was the cheapest insurance policy I ever bought. In a collapsing market, the price you pay doesn't matter. The only thing that matters is, do you have the metal in your physical possession? If it's in a bank vault, you don't own it. If it's in an ETF, you don't own it. If it's a digit on a screen, it's a lie. I know there are skeptics out there. There are people who will call this fear-mongering. They will say silver has been manipulated for 40 years, and it will be manipulated for 40 more. To those people I say, look at the inventory. You can manipulate a price, but you cannot manipulate a physical shortage. You can print paper, but you cannot print silver. The math has reached its logical conclusion. The vault is empty, the shorts are trapped, and the East is demanding payment in real assets. We also have to consider the dark history of government intervention. On April 5, 1933, the United States government committed the largest act of wealth confiscation in history, Executive Order 6102. They made it illegal for citizens to own gold. They forced people to sell their gold to the Fed for $20 an ounce. And then, once they had the gold, they changed the price to $35. They stole 40% of the people's wealth in an instant. I'm telling you now, they will try it again. They will call it a national strategic metal emergency. They will say they need your silver for the green energy transition or for national defense. They will offer you the fake paper price of $76 and tell you that you are a patriot for surrendering it. And then they will revalue it to $500. If you bought your silver with a credit card, if you have it in a registered account, they know exactly where to find you. This is why privacy and physical possession are the only ways to survive what is coming. This is why you need to be subscribed to Analysis with AG right now. I don't know how much longer this channel will be allowed to exist. The financial establishment is terrified of independent research that reaches the masses. They want you watching the teleprompter readers on CNBC who will tell you that everything is fine, even as the exchange locks limit up. They will call it a technical glitch or a temporary suspension. They will lie to your face to keep you from panicking until they have secured their own exits. Subscribe now. Hit the notification bell. Because when the calm defaults, when the banks close their doors for a bank holiday, when the government announces the confiscation order, you won't find that news on the front page of the New York Times. You will find it here, in the community of people who were brave enough to look at the math before the lights went out. We are now 51 minutes away from the start of the end. In less than an hour, the first trades will hit the tape in Sydney. We are going to watch history. We are going to watch the moment the paper silver market hit the wall. If you have your metal, if you took delivery, if you stood your ground, you can sleep soundly tonight. You are holding the only asset that cannot be printed, cannot be deleted, and cannot be devalued by a central bank's decree. You are holding real money. The rest of the world is about to find out that silver isn't $76. It isn't $88. Silver is rapidly becoming unobtainium. The doors are locking. The vault is empty. The great divorce is here. Stay tuned, stay frosty, and keep your eyes on the tape. The next few hours will define the next few decades. The logic of the system has failed. For years, the bullion banks believed they were the masters of reality. They thought that by pushing a button and selling 1 billion ounces of paper silver, they could dictate the value of the physical world. They forgot one fundamental truth. You can't build a solar panel out of a futures contract. You can't build a missile guidance system out of a digital promise. The industrial world requires the physical atom, and the atoms have run out. Think about the sheer scale of the industrial demand. Every electric vehicle requires nearly an ounce of silver. Every solar panel requires significant amounts of silver paste. Every 5G tower, every satellite, every high-end medical device. We are moving into a world that is more silver dependent than at any point in human history, and yet we have treated it like a worthless byproduct of copper and lead mining. We have consumed the above-ground stockpiles that took 5,000 years to accumulate, and we have done it in less than 50. The banks are now realizing they are on the wrong side of a geological limit. They are short 1 billion ounces in a world where mine production is falling and industrial demand is exploding. They are trying to cover a canyon with a postage stamp. Tonight, the world sees the gap. Tonight, the world realizes that the emperor has no clothes and the vault has no silver. When the market locks limit up, it is a confession. It is the exchange admitting that it can no longer facilitate a fair trade. It is the moment the price discovery mechanism breaks, and once it breaks, it doesn't just fix itself. Trust is the only currency that matters in finance, and once the COMEX loses the trust of the physical buyers, it is over. The pricing power moves to Shanghai. It moves to the private dealers. It moves to the people who actually hold the metal. I want you to prepare yourself for the headlines tomorrow. You will see words like unprecedented volatility, market disruption, and regulatory intervention. These are all code words for we lost control. Do not be fooled. Do not let them talk you out of your position. The people who hold physical silver right now are the new elite. You are the ones who will have the purchasing power when the dust settles and the new monetary system is born. We are entering a period of extreme darkness for the dollar. The silver market is the first domino to fall. Gold will be next. Then the bond market, then the dollar itself. It is a sequence that has played out dozens of times in history, from ancient Rome to Weimar Germany. The script never changes. First, the metal disappears. Then, the paper price gaps. Then, the exchange fails. Then, the currency dies. We are at stage 3. I will be here, tracking the order flow, watching the Sydney Open, and reporting the truth as it happens. Make sure you are part of this community. Share this video with everyone you know who still has money in the system. They deserve to know that the exit doors are closing. They deserve to know that the limit up move is not a sign of a healthy market, but the final gasp of a dying one. 47 minutes remain. The algorithms are spooling up. The traders in Sydney are drinking their coffee, staring at a screen full of buy orders they can't fill. The banks are making frantic phone calls to the regulators, begging for a suspension. But the physical world doesn't care about phone calls. The physical world doesn't care about regulations. The physical world only cares about the metal. And the metal is gone. Possession is 10/10 of the law in the world we are entering. If you can't touch it, you don't own it. If you can't see it, it isn't there. Tonight, the paper illusion vanishes. Tonight, silver becomes the most sought-after substance on the planet. I hope you're ready. I hope you're holding. Because the truth is about to become very, very expensive. This is Analysis with AG. I'm your host. Stay tuned as we watch the opening bell of the end of the world as we know it. I will see you on the other side of the limit.